Here, you see this? Right, we wobbled around 10 a.m. and we really didn't do anything. Okay, we really didn't do anything. We kind of, which is kind of what the market is doing right now. The market is not doing much of anything. It's waiting for good news. It wants another 50 bips. Okay, which you're not going to get if you heard what Powell said today. But look, it kind of went up. This is a 50-day. This is the 50-day moving average, right? It's kind of hugging it. It's hugging it around. It's hugging it this way around. It gets a little bit further and then say, ah, never mind. And then at 2 o'clock, Powell start talking. Right? And look at this. Look at, I mean, this just news. It's just, we're just stalking people. We are just stalking, and look what happens to the spread. Now, eventually, it kind of recovered, and thank God we are back. Well, we're up 0.5%. Okay, so we're kind of wobbling along, really again hugging the 50 moving average. And frankly, there's somebody to be made there with options, quite frankly, because it's starting to get quite predictable. But the point is that we're hugging the 50-day moving average. That means that you have to be extremely careful as far as any kind of news is going to come out at the end of the week, because if they don't like what they hear about unemployment, or if it look what happened, just because you mentioned, I don't think 50 bips, 50 another 50 bips is going to happen. Look what you got to see here. Okay, so you got to be extremely careful, especially at the end of the week. Having said that, whenever I show you a chart like that, I am mostly talking about the price risk, right? This is all about the price risk. But sometimes it's not just about the price risk. It's also about the credit risk, right? Because eventually, yeah, I mean, we've got some huge volatility here and there, but if you look at this more if you pull back a little bit, right? If you look at this a little bit further out, you could see that really, the market is going up. I mean, things are looking up. I wouldn't get too worried about things right now, but the point is the market is up. Okay. But if we want to take a look specifically at one particular stock, right? Because right now, I believe there's a time to start to get involved with small caps. And as I said yesterday with GCT, I mean, GCT, I put an option in this morning. It was up. It was up more than 10%, and then it kind of fizzled out. But that's okay. We'll come back to it later. The point is that you want a stock that is doing well. You want a stock that has good financial. You want a stock that is not too expensive. And let me show you what I am talking about. It's too good to be true. It's showing me the look at the portfolio. This is a percent gain overall for the portfolio. That's a portfolio. But if I'm looking at, um, fall performance is down 2.5%. Okay, this makes more sense. All right, I mean, it's not a good thing, but it's better than nothing. So what I want to talk to you about today is I want to talk to you about ACM research. ACM research, which is up 4.6% today. Now, GCT is right. I mean, okay. It's not, doesn't trade after. Okay, ACMR. So let's take a look at ACMR research. Why do I like this stock? Well, if you see what's going on here, you could see that the stock is going up, right? So that's always a good thing, and this is obviously what I'm looking for. Now, what I want to show you specifically is let me show you what has been happening to the 50-day moving average since March. And you could see it really took off after earnings in March, because it had some very, very strong earnings here. right here. He had some very strong earnings right here. And then it kind of it got stuck with what's going on with and then they had strong earnings again, but again July start killing all the small stocks because everything was overbought. So and then it got killed in August, and then in September again. But since September and the whole discussion around small caps is starting to pick up, as you could see. Right, we're starting to break the 50-day moving average here, and it looks like for the first time it actually seems to be working. Well, we'll see, right? So if I look at what happened today, today we jumped very strong, and so does GCT. The market wants to take off on small stock, but then it gets all nervous. We shall see what happens next. It didn't do much of anything. I wouldn't worry too much about it at this point. Okay, so why do I like this stock? Well, frankly, first of all, the P ratio, as you could see right here, is only 16%, right? You could see the beta on the right side here is a little bit, rough, but that's okay. So the P ratio is at 16. Earnings per share 1.26. That's what the stock is trading at 20. But if next year we go from 1.26 to 1.83, which would make total sense because the stock is doing well, the forward P is only 11. So on that basis alone, purely from that basis, it's very cheap. Now, who are they? What do they do? Okay. So let's take a look at ACM research for the sake of understanding, what this company does, right? So as you could see, the company is an integrated, hold on, take it easy here. Integrated OEM tool designed to optimize IC and compound semiconductor manufacturing. So right away, you've got yourself the keyword integrated original equipment manufacturer. So they build the thing from scratch. They are fully integrated. And the other keyword is semiconductor and, of course, manufacturing. So they build this thing. This is not a service company. This is a company that is tied to semiconductor. You need those things. I don't have to explain to you what a semiconductor is, hopefully. But the point is that this company is doing very well in terms of what their business model is. Let me explain to you. Give you more additional information, right? So what the company does, who they are, the company is a global world-class equipment manufacturing service, the IC, compound semi, wafer level packaging, and wafer manufacturing market with a broad portfolio of products. We develop, manufacture, and sell production equipment, provide services solution for wet cleaning having to do with semiconductors. So there's a bunch of keywords in there. The first one is that they develop, they manufacture, and they sell. So they are fully vertically integrated. So they control. So that what that means, in financial parlay, is that they are able to generate margins. Why? Well, because they don't rely on. It's not like they come up with the idea and have someone else built it, which is going to cost you more money, right? They develop, they manufacture, and then they sell the production. By selling it, obviously, they keep as much as a profit as possible. Now, the industry that they serve, who are they selling? Well, IC and compound semiconductor manufacturing system. Well, this is when we talk about understanding and learning what it is that we do. I mean, this is about education, right? This has to do with a semiconductor manufacturing. So to accommodate the requirement of digital services, you're developing, progressing faster, right? more powerful, smaller, and lower semiconductor chips. We need process tools that help you achieve the finest feature geometry. Let's not get is to be a specialist in semiconductor, but basically what they do is they help the the quality, right? We need process tools that help you achieve the finest feature geometries while also preventing the killer defects that reduce yield and therefore profit. At ACM, we got the tool to support you. Obviously, they're talking about the guys that the women that build semiconductor proprietary cleaning and deposition processes. As logic device technology knows going to shrink, we continue innovate proprietary solution to address both your legacy and advanced technology requirements. So they do a bunch of things having to do with making sure that your semiconductor is operating efficiently. And you could see they got a bunch of cleaning systems here. Yeah, I know. What the hell? I don't know anything about. Well, you need to understand what semiconductors are. You need to understand we just don't, pop it and just put it in your computer. No, there's a lot of things happening, and this is what these guys do, which is good. You want it to be complicated because if it's complicated, then not many people can do it, and therefore they have kind of a control of the market. Okay, so as you could see, they've got a lot of products here that I use. Okay, next, wafer level packaging system. What what is that? What is a wafer level packaging system, right? If you're following the integration roadmap, you know advanced wafer level packaging are critical to improving the power, performance, and cost of next generation semiconductor devices. Do you have varied needs for your NLP process? And again, they provide you with that equipment for your semiconductor. Okay. And they also have the wafer, manufacturing reclaim. Lots of things having to do with it with the semiconductor. Okay, fine. Um, who is their customer? I like to know who is it that they sell to. Okay. So let's take a look at the financials. And by financials, I like to take a look at the 10K because that's basically the annual report. Let's take a look at the annual report 10K. Right. Um, and basically, if you take a look at what they do, I mean, this is a business, you should read it, right? We supply advanced, innovative capital requirement. We supply advanced, innovative, developed to the world fabrication of advanced integrated circuits. So chips can use our wet cleaning. And I mean, you could read it on your own, but basically, revenue from wet cleaning total 80%. So most of the stuff that they do is 80% is they clean, believe it or not, the semiconductor. Okay. So that's like a big deal. And we introduce and deliver of new tools, blah, 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 wet cleaning equipment for front end production processes. As you could see, this is kind of what we saw before the technology. I mean, I would suggest that you read a little bit so you understand exactly what you're buying. Our customers. That's what I want to see. That is what I want to show you, right? Since 2009, we have developed more than 225 wet cleaning and other front-end processing to more than 185 repeat. You see, where repeat orders or acceptance upon contractual performance obligation. The balance are waiting customer acceptance. We have begun to add to our efforts We generate most of our revenue from a limited number of customers as a result of our strategy of initially placing equipment with small numbers of that are thriving. Okay, in 2021, 50% derives from two customers, Shanghai and the semiconductor. I mean, you have to be a little bit careful because it's a business. Okay, but Shanghai Hong Kong group or the founder accounted for 28% of our revenue. I would be careful when you have too much concentration on one customer, but they've been in business for quite some time, so it would appear that they know what they are doing. Okay. The next thing I would recommend is let us take a look at the financials. I mean, how these guys doing, right? So let's take a look at ACMR research. Let's take a look at the financials. Okay, so if we take a look at the financials, we are going to see that revenues are going up. That is always a good thing. That's what you want. You want revenues to go up. Next, EBITDA. Look at the EBITDA. Remember, this thing is only a P ratio of 16 and it's going gangbusters. Nobody's looking at it yet, but watch out. How much interest expense? Almost no interest expense, as you could see here. So they don't owe any debt to anyone. So that's very good, people. That is very good. That is excellent. Okay, let's go back to take a look at at the stock charts to better understand what is going on in this stock. Okay, so as you could see, if I look at in the past 1 year, look, since September of last year, we went from 15 to 26. That's not too bad. Okay, September I'm talking about. No. This is from this year. We are up almost 35% in less than a year. That's that's excellent return, quite frankly. Now, you will notice that for the longest time we were below the 50-day moving average and we went above the 50-day and we seem to be staying here. That's a good sign. That means that the stock is on its way up. Why? And frankly speaking, ACM research today, there was some news. Operating provides backlog data. What does that mean? Well, let me show you what it means. All right. Global News Wire. ACM Research is a supplier of wafer processing solution. Today announced that its operating sub as you could see, backlog figure as of September in Shanghai. As of September 30th, 2024, its total backlog amounted to 964 million respectively. The total backlog includes a mix of orders for tools, but not yet. I mean, the backlog is up. Orders under control is up 3.66%. It's not a financial measure, but it shows you there's a method for determining and calculating backlog. Right? So there's some good news here. And when I look at the stock, quite frankly, I like the direction of this stock. I like the way it's moving. It's got some good potential. Okay. Now, if I take a look at, let's see if they have options available here. Wow. Look at the options. Look at the options. Hold on. Look at the option. This is the October 4th. See? You could have made 114% today if you had bought the October 4th. I mean, you had bought it before, obviously. Um, that's a little too short for my taste. I would go for like January 17, let's say. Still, you could have made 23% in one day, 83% in 4 days. That's not too bad, people. That is not a nice, cute little options to play with. Okay, so there's some gain to be had here. So, what are we talking about? What we're talking about is we need to explore, we need to look for and find small caps. You have no choice. What are you going to do? You're going to go after Nvidia again? Everybody else is on that boat. Remember, this is not an easy process. This is not an easy process because that's how you make money, because you're the first one there. No one is looking at it. How do I know? Because if everybody were looking at it, the stock price would have been higher, the P would have been higher. They would be willing to spend more money on this company. I mean, look at the financials. Look at the industry. Look at the way they're structured. I mean, they make the stuff, they clean the stuff, they sell the stuff. They've been around for a while. Backlogs looks very good. You may not understand everything that I'm telling you because you may not understand what semiconductors are all about. I suggest you find out. I suggest you understand. I suggest that you read. But I showed you where to look, right? I showed you to look at the financials. I showed you to look at the 10K. Look it, read it, understand it. Now, I'm not saying buy with your eyes closed. No, you need to understand what you're buying. That's extremely important. But right now, with rates going down, I mean, not 500 basis points, but rates are starting to come down. That is going to benefit the small company stocks, the small caps at less than 2 billion in market capitalization. That is the area that you want to play in. That is where the action is going to be. I don't see any action yet, but hold on. I mean, there's no action in the stock market either. The market is kind of doing this since the Fed lowered the rates. What does that mean? Well, it means that the market is looking for a story, is trying to convince itself that we do not have a recession, but it's not sure, it's not positive. The market is a very emotional animal. Look at today. Look at today what happened. The Fed chairman Powell started talking at 2 o'clock, and he was like wobbling here, wobbling there. He wasn't really saying anything having to do with, are you going to lower the rates? Because they were trying to pin him down. Are you going to lower the rates? And he said, well, hold on. He said, oh my God. And the market started plummeting because it didn't like what it heard. But you can't get your cake and eat it all the time. You have to be careful. So what do? This is perfect. Listen, I'm here to help you, make some money in the stock market, either directly with stocks or with options. And I'm telling you that this is a good news because not everybody else is doing it. Everybody's kind of wondering what's happening. Are we up? Are we down? Is this a bull market? This is not a bull market. Everyone wants to go back to July, prior to July, when Nvidia kept going up and up and up and up and up and making lots of money. But that story has changed. That story is gone, right? That dog is not hunting anymore. That dog is staying home near the fireplace, is not doing anything. It's waiting. And the market, and mark my words for this, look at what's going to happen Friday. There's some PMI and things during the week. But Friday is going to be the unemployment, because the story has moved from inflation, which looks like under control, to unemployment. What is unemployment going to look like? It is creeping up, but unemployment usually doesn't just go up and then go down. It tends to keep going up. We don't have an issue yet with layoffs. Layoffs seems to be under control. So then how can you have a soft landing with unemployment going up? That's a question. Um, and I think what if you believe in a soft landing, then you have to believe that unemployment is going to start to come down. Now, if you gotta, that's a tough story to believe because it has never happened. I mean, once it only happens once that the Fed was able to lower inflation and not put us into a recession. But that's the name of the game. That's what you're in for. You want to make money sitting down and just trading and making money. Just that's what it is, right? That's the price. Because for you to make money, somebody else gonna have to lose money. So you want to be the one. And how do you make money? Like I always said, you want to buy when everybody else is selling, and you want to sell when everybody else is buying. Right now, I wouldn't say everybody's selling, but not everybody's buying. So you have an opportunity right now to start, but don't buy when everybody else, don't buy GCT or and ACMR when the stocks start to go up. I mean, today the SPY was up 2.25%, and ACMR was up 4%, and GCT was down 3%. Yeah, I mean, they are quite volatile. You need to understand that if you were to look at the earnings for small cap stocks, they tend to vary by 40%, while the large company stocks is around 7%, right? So surprises you tend to have more surprises on small stock than large stocks. But we're not buying all of them. We're buying just the best. And why do I mean by the best? I want to make sure I have sales growth. B, I want to make sure the P ratio is not too high. C, I want to make sure my EBITDA is growing, my cash. I want to make sure I generate some cash, because you could be selling stuff and not making any money. These people are making money. They're generating cash. That's what you want. And D, I want to make sure that we are not having too much debt. And I look at the interest expense, because if you don't pay your interest expense, you're done for. Right. So at least I want a stable base, right? I want to make sure that I don't have to worry about the financial of the company. I just want to worry about what? I want to worry about the market. I want to worry about what they're thinking. I want to worry about what the story is. Do they think there's going to be a recession? Do they think this? Do they think that? Which is fun, but because they themselves not so sure exactly what's happening. Because how do they know what's happening? Well, they just look at the numbers. Well, they look at what the Fed, and like on Friday, they're going to look. Oh, let's take a look at the unemployment. Let's see what's happening. But you could make money before that by taking advantage of the volatility, because it's going to be doing this, right? I mean, look at GCT, right? Take a look at it. I mean, on Friday it was up 20%. It's down 3%. See what happened. Write it down. GCT. Look what happens tomorrow morning with GCT. You're going to like it. You're going to be surprised. Unfortunately, if you haven't bought it, it's going to be tough, right? Because you're going to have to get it on right away. And I bought an option today, but I bought it at $5, a little bit above market, so I could get it on at 5, right? We'll see. We'll see. But the point is, you want to worry mostly about what the story in the market is. This whole thing, this whole stock market is all about what the heck is the story they're telling us. A. B. Do you believe it? C. Is this what's really happening? Do you really care about C? No, you do not care, because no one knows exactly what's happening in the stock market on the ground. I could tell you on the ground, I'm not talking about the numbers, because all the numbers that you're seeing, are delayed numbers, right? They go out, they do the survey, and then a month later they get to you and say, okay, this is what happened a month ago. I want to know what's happening right now, because by the time that gets through the numbers, it's too late, right? So you need to know what's happening before everyone knows about it. So how are you going to know that unless you do the survey yourself, which you don't have the ability? Now, of course, you could be lucky and say, okay, because right now what you need to figure out what is going on with unemployment. I don't know. Maybe you know a bunch of people that have lost their jobs. I could tell you personally that I have got a bunch of students. I was in New York um, on Friday. I was in New York on Friday, sorry, on Thursday, and we were supposed to have 15 to 16 companies in our job fair. Half of them didn't show up. Coincidence? I've got students that are looking for jobs, very smart students. We're talking about masters and master students, and they're looking, and they're getting interviews, but it's taking long for them to hear back from the employer. So it's slowing down. And a very important factor, I don't know if you heard about Bloomberg, if you heard about Amazon, they are telling their employees it is time to get back to the office. No more 3 days in, 2 days out. No, 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 no. 5 days in. What's that to do with unemployment? It means that employers are getting a little bit more confident. Remember during COVID, they didn't want to say anything because then you quit and then they got to look for someone, pay more money. So they say, okay, fine, fine. You want to work from home, that's okay. Not anymore. Now they are saying, come back to the office. And if you don't come back, well, sorry to see you go, but frankly, I don't need you because I probably could hire someone else. You know what I mean? So it feels, unemployment feels heavy. Now, if you believe that, this is important because that's a direct impact on your ability to make money in the stock market. Because if you believe that, if you believe unemployment is going to be an issue, then it doesn't matter that you lowered the rates by 50 bips because all you're doing is that you're helping out an economy that is slowing down. You're not helping out here. You got to do it. You have no choice. Otherwise, you're going to be in a recession because we are entering the recession. Remember, it takes about 10 quarters for any kind of rate to start impacting the economy. Correct. Right. So those rates, that 10 quarters. You know what 10 quarter is? We have 4 quarters per year. We're talking about 2 years. Yes. 2 years ago, that's when he raised those rates by 500 basis points. Remember that? Remember that? Anyway, nine increases like that. So now we're starting to feel the impact. Now, on one hand, you got people saying that, you know what? It was too much. Now we're going to go into a recession because you are never be able to. It's like trying to kill a fly with a hammer. It's very difficult. But guess what? Guess what? Other people are saying, no, this time is different. It's very different. We're not going to have a recession. Why? Why are you going to have a recession? Is this 2000? With the dot-com bubble? Are we that high? I don't know. You want to see how high we are? Let us take a look at the P ratio for the market. I want to show you the P ratio for the stock market so you have a feel for where we are in terms, at least in terms of that valuation. Let me share. So this is important because I think it helps you really visualize where we are. Okay. So let us share the screen right now. Hold on, stay with me. Don't forget to subscribe to the channel, by the way. It's also very unlikely. Okay. You see this? You see this? This is the P ratio, the Shiller P ratio adjusted for inflation. What do you learn here? Well, look at this. See here? This was 1929. 1929. Remember 29? Well, you don't remember, but something bad happened. Remember 1987 here? Okay. Market dropped 20%. Remember this? 2000, look at the P ratio was at 42. Okay. Remember this? 2008, we are 27. Remember this? This was COVID, 37, and we are 37 here. I mean, come on, people. We are we are pretty high right now compared to everywhere we've been in the past, and this is adjusted for inflation. That that I would say, and let's have a recession because the market is overbought and we're going to crash because we it's too high. There I would believe you. I would believe that it could potentially be a crash tied to this. But it's not going to happen. It's not going to happen because they're not going to let it happen. They're not going to let it happen because they can't let it happen. And the reason they can't and they won't is because the rates are pretty high right now. If tomorrow we wake up, like we woke up in July and say, you know what, Nvidia is too much, we should stop buying. If tomorrow you all wake up and say, you know what, the P ratio is way too high, way overboard, this is ridiculous. I mean, the only second time we've been highest was in 2000 with the dot-com bubble, and you start selling stock and the market starts plummet. I bet you that Powell is going to get there and he's going to lower the rates. He's got 500 basis points he could take it down to. That's a lot. They don't want that, trust me. And especially in the middle of what? Of what? Of an election. Some people are wondering why did 50 bips to begin with. It was a little bit too much. It was a little bit too convenient to do 50 bips when everybody was, but we don't have a recession. I mean, for you to have a recession, you gotta have something that you're gonna have something has to create to start. You know, in 2008, yeah, we had the financial crisis and we had COVID and we had the dot-com bubble. You don't have a recession because people don't want to go to work. You don't want to go to work because you're afraid, or you don't want to go to work because you don't have a job. You don't want to go to work because everybody's fired. But that's not what's happening right now. So I wouldn't worry too much about it. Plus, like I said, this is an election year. That's not going to happen. Okay, it doesn't matter who wins. Imagine that if Trump wins, and then you say, you know what, I think we stock market is dropping. Let's not lower the rates. You bet you that they're going to lower the rates regardless of what happened, because one thing they don't want you to know, one thing they don't want you to see, one thing they don't want you to understand is that behind me is the national debt. And that one, my friends, that is what you have to worry about, because that cannot be dealt with rates, cannot be dealt easily. In fact, as you probably noticed it, maybe let's see what happened with the debate with the VPs, but no one is talking about how to deal with the national debt, unfortunately. I mean, they're not stupid. They know that you're not gonna like what they're gonna tell you to fix the national debt. You're not gonna like it one bit. You know what they want to do? Well, I mean, do you want to work until you're 70 years old, like in Italy? Do you want to get paid less money for your retirement? How about we start cutting down on Medicare and Medicaid? You want to? That's not going to happen. Okay, so they're going to keep this thing going until, I mean, we're at 35 trillion until we got, I don't know, 56 trillion, and you said, you know what, we can't pay it back. I'm sorry, this money cannot be repaid. It's impossible. The only way this stops is when they stop financing us. They stop buying our debt to refinance the old debt. We're talking $1 trillion every year. Where are you going to get that money? 1 trillion, that is higher. The interest alone is higher than our annual defense spending. Let's not talk about that. Exactly. Let's not talk about it. It's too depressing. What we're here for, we want to make money like they do, right? And right now, you have two ways of doing it. You're going to go for safe, quote unquote, small caps, low P ratio. I gave you GCT a couple of days ago. I'm giving you a CMR. Okay. Read it, understand it, learn it. Then, once you're comfortable with what they do, at least understand. And the financial looks like it looks good, but I mean, look at it again. I mean, I've got years of experience, so trust me on that. But look at it yourself. Then, what you want to do is you want to take and you want to learn and understand how the stock trades. And it doesn't trade because of the news. I mean, yeah, I mean, they show you the news and then they show you the stock. But I mean, look at the ACMR. The stuff move every second. We don't have news every seconds, right? Think of it like the weather, like I keep saying. Look at it as if it's the weather. In the winter time, we're gonna be cold. I don't know how cold, so there's a pattern to everything. Trying to learn the pattern. If we were to look at ACMR, right? Let me get you back into ACMR so you could see what I mean when I said the stock price, the way it trades. Look at it. Okay. Look, you see that? Look. Hold on, it's gonna come. Look at the stock price. See? Right here. Okay. As you could see, what are you seeing? Well, it's up a lot today. I know. Yesterday, GCR, Friday, GCT was up 20%. It's very volatile. Now, what do you notice? Look since September. This is a 50-day moving average. Do you see how much it hugs it? Right? Look, it hugs it. It lets it go. It hugs it again. It lets it go. It hugs it again. It's a small stock, so it's going to be violent moves. I mean, 5 points. It hugs it, and then it lets it go. It hugs it, and it lets it go, and it hugs it again. Tomorrow it's going to do that. So, as you could see, you need to understand and you need to start reading it like the weather. Now, is there a technique? Is there a way to find out, okay, if I do it this way? No, there isn't. Don't listen to them. I mean, it has to do with your intuition, it has to do with luck. Obviously, you don't want negative news because then it screws everything up in terms of the way the chart is going to move. You just want to worry about, I want it to be a pure environment. I want it goodbye, hugs it, goodbye, hug. See, it goes around it. So technically speaking, tomorrow you should expect it to go down. So if you want to buy the stock tomorrow, you should have an opportunity. Okay. Now, if you go back further, let's go back to August. Look, for the longest time, it stood away from the 50-day and then it came down again. In fact, I would say that it hugs the 20-day moving average even more. Look at that. It leaves it, takes it back, and leaves it and takes it back, and leaves it and it takes it back. Now, this is good because it's got a pattern. It's got a fantastic pattern that I like a lot because it's predictable. Now, is it going to tell me exactly what the stock price is going to be tomorrow? No, but it's kind of giving me a feel for what's happening with the stock. So, therefore, that's what you need to focus on. You want to focus on the way the stock trades so you learn how to predict the weather. I'm just kidding. You learn how to predict the stock. But 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 you have to do some work, right? You can't just sit there and wait for somebody to tell you. You gotta think it's your money, right? So don't forget, if you want to see all my trades, you could go on Patreon. It's only $5, I think. First week is free. You could see what I'm doing because I can't possibly tell you everything here. It would be so confusing. You go online, you look at it, right? My goal is really for you to learn what's happening and understand what's happening So you could take advantage of them and take advantage of the situation and take advantage of the market instead of the other way around. Right? Usually, these people play a six-dimensional chess, believe it or not, and you usually don't have a chance. But that's okay as long as you're aware what's happening. Okay, so in conclusion, ACMR, GCT tomorrow. Watch GCT. ACMR tomorrow should start heading south, but GCT, there's potential there as well. Watch the video, like, subscribe, whatever you need to do, but stay on top, learn, educate yourself, and be a smart investor, because at the end of the day, it's you against them.